Stocks rebounding this morning after a volatile first day of the second quarter. The major indices weighed down by technology sell-offs and escalating trade tensions between the U.S. and China. Joining us now is S&P Global Market Intelligence Portfolio Manager Erin Gibbs. Erin, good to see you. Thanks so much for joining us.
Thank you.
What's your take on the markets here?
You know, we've actually seen a lot of weeks like this where we start off the week negative and then we get some good news toward the end of the week. We tend to rebound, or vice versa. It's basically just a constant roller coaster, particularly since the middle of January. So for us, this is totally fine. Valuations came in really high at the beginning of the year. We're starting to look a little more normal. There were some really overvalued stocks in the tech sector, and certainly that bringing the stock market down isn't a surprise. For us, we still focus on the fundamentals. We're still looking at a solid year. We're looking at really great economic news. And so if we have a few months, potentially even a couple quarters of rough periods and a bit of a correction, for us, that's okay. We still see solid fundamentals.
Where are you on trade? I mean, I think the argument we've heard from many on Wall Street is that at some point something will be figured out, that there's a lot of negotiating going on here. But I think I could make the case that we're already in a trade war, whether it's full-blown or not. I mean, I mentioned earlier this hour that the Chinese have come back this morning and have talked about a proportional response to our $50 or $60 billion on tariffs on intellectual property that are supposed to come out later this week. So there is already this tit-for-tat back and forth that's going on. Where are you on trade and how it impacts the markets?
You know, that's another thing that changes day to day along with the markets. You come out with these big headlines that initially are quite scary and really seem like they could escalate. And then you see that there's about 50 exclusions, and actually, really, it's sort of a tempest in a teapot. So as it plays out day by day, we constantly try to look at how much of the industry is going to be impacted on a protection basis versus the potential to hurt. And for us, we constantly see that the tariffs that are meant to protect the industries are very, very tiny. We're talking about 30 basis points of the market, 60 basis points of the market.
So why is the market so rattled by it?
Because you're potentially hurting, so that's the amount that you're protecting. The amount that you're potentially hurting, we're talking about 15% of the market. So you're protecting these 30 basis points, potentially hurting 15%. And that's what's rattling Wall Street. And when you're constantly doing these analysis day to day as it constantly changes and you look at the trade-offs, it just doesn't make sense from a numbers perspective.
It seems like investors, though, are just constantly searching for a reason that the bubble has burst, meaning that there was euphoria in literally every asset class, from cryptocurrencies to stocks, and that it started with higher interest rates, inflation in early February, then it shifts to tariffs, then it shifts to Facebook can't protect its own customers. Again, is it just the fact that you're beginning, and people are feeling it in terms of the interest rate increases from the Federal Reserve, that you are withdrawing incredibly easy money, unprecedented monetary policy of the last 10 years, and investors don't really know where the bottom is in terms of how much the monetary policy inflated literally every asset class?
Well, I wouldn't blame the entire inflation on the Fed policy. I think that's a dramatic overstatement. A lot of it was just investor euphoria. Also, I mean, we just had phenomenal earnings growth. So coming off of 5 years of very mediocre single-digit earnings growth to suddenly looking at double-digit earnings growth, you know, corporations are suddenly making 20% more money. That creates euphoria, and that's what helps also people jump into the market.
But that doesn't explain the euphoria in, like, Bitcoin. That's my point, is like Bitcoin, which, I've said all along, again, is the canary in the coal mine.
Yeah, but that's a completely different asset class. So again, leading that to saying that's related to the Fed, I think that's a tough jump. People like bubbles.
You're not worried about the Fed?
No, I think they are very good at explaining what's going to happen, how much they're going to raise rates. We see days when they make announcements, the market doesn't really react. For us, I think it's more about value. We came in with really high valuations, particularly in the tech sector. There was that euphoria. People liked all the stories. And if it comes down 10, 20%, we're still within, well within reasonable valuation ranges.
This is normal. That's, I mean, it doesn't seem like you're overly worried about Well, much.
My point is that what the Federal Reserve did in the last 10 years and what central banks around the globe did in terms of buying assets and holding them on their balance sheets and keeping rates low as long as they did was unprecedented, and it's not normal. And so the end of that is hard to predict.
And the $4.5 trillion is not normal.
Right. And by the way,
but
Jay
also
Powell,
having a recovery that takes 8 years isn't
Right.
normal. So you shouldn't have a normal response to an abnormal economic environment.
Jay Powell, by the way, is speaking on Friday. I want to just reiterate that after the jobs report. That's something
important.
that people will keep talking about.
Yeah, for sure. For sure.
So looking ahead, what keeps you up at night? I mean, is it a potential trade war? Is it an interest rate hike? I mean, what is it that makes it a political event? I mean, what scares you the most about this market?
It was initially a lot of the sort of initial policies that come out of Washington before they're tempered down and watered down. Those always are a little scary because for Wall Street, for us, it's more about worrying about what's going to happen next, not so much about what has already happened in the past. And of course, all these economic reports are about what happened last month.
Sure.
So we tend to be worried about the future. And so whenever you see big headlines about what could be happening, yeah, that keeps you up at night.
What's the future for Tesla? This company burned through $3.5 billion in cash last year on revenue of $12 billion.
Yeah.
How do you like that comparison? CEO Elon Musk reportedly taking over production of the Model 3 after reports that the car maker will miss fourth quarter production goals. This comes as a new USA Today article titled, "Can Elon Musk avoid the fate of John DeLorean? Tesla CEO may need to rethink the strategy." Warning that Musk's Tesla's Model 3 production woes could lead him down the same fate as the Back to the Future car maker. Now, this stock is down 14% this year, Erin, and we know that there are real liquidity concerns. We're going to speak with the Moody's analyst this morning who downgraded the debt. What's your take?
That was a big story that they downgraded the debt. Look, Tesla is notorious for missing estimates. In fact, for the past 2 years, they've missed 50% of their estimates and their targets. So this is sort of normal. 1 quarter he misses, 1 quarter he makes it. It's
So
look,
what do you tell an
I don't
investor who's holding it and is down 14% in the last 3 months? You can't just say, hey, it's normal, right? I mean, what do you do?
I don't like the stock. We don't own it in our portfolios. I've never recommended it. I think any company where they miss their earnings and they miss their targets 50% of the time is not a company worth holding. I think there's a lot more better quality out there.
You've got a founder who jokes about bankruptcy on April Fool's Day, driving the stock down 5% yesterday and sending those bonds, their most recent raise, down, I think it was 85 cents on the dollar they traded down to.
I don't understand what he was thinking with that April Fool's joke.
Again, never underestimate the mistakes made because of your arrogance and ego.
Got to be a better topic, right? You got to make it.
God. April Fool's, your stock is down 5% as a result of your comments. Oh, no, that actually is true. That's not a
He has
joke.
a great inflated
There's some
sense of
other issues.
self-worth.
Erin, thank you for your insights. Appreciate it. Erin Gibbs.